Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Make sure you're doing your part to take you and yours to the upside. And let's get into the charts, shall we? So we called it for the fake out down to the downside. We got the bounce and rejection up at this 0.5 region of this downward projection diagonal fib. And we're now seeing ourselves possibly start to gravitate down to the bottom of this upward slanting diagonal fib. And it would be a nice confluence of both the regions down here at 22,930. And this is one the 6-hour time frame wants to dump on you. It comes with the fury. Let's hope it brings the fury and does a double bottom situation down in these regions. It is midweek reversal, ladies and gentlemen. So what is a midweek reversal? That is when you see the week reverse from the position it was heading the previous 2 days, Tuesday and Wednesday. Now it was a little bit tricky today this week because Monday we kind of faked out to the downside. Tuesday we went kind of up and sideways, and at the beginning of Wednesday we went down and surged up. So based off this week move to the upside, the midweek reversal would dictate a kind of downside bias, but it's not just that. We of course looked at all the liquidity as well, and yeah, we were seeing overbought time frames on multiple time frames. The only thing that was the curveball was the 22-hour, if we remember, and yeah, so we're seeing the 6-hour kind of come down, and we had the 12-hour suppression as well. Getting a little bit of a curve here. It was moving slowly. It got that green candle brought it up here instead of the rejection there, and then it started to dump down, and this could get curved and see itself down completely. The 22-hour did get some expression up here on this close, with these two candles closing in the state that they did. This even shows an even clearer rejection of this part. This could completely reverse by the end of Thursday's close, though. You always got to keep it in the back of your mind. You're never 100% on the money. So let's take a look. But it's fascinating, isn't it? It just gets these rejections off of these fibs, which is telling you what exactly in this narrative sense downside idea of this reversion to the mean. It reverted to the mean once, bounced off it, meandered around. Is it going to revert back down to here? Who knows? They coincide down here nicely at 19K. Let's just leave that there for fun. Fascinating, really. Go all the way back to November when these were created. November to the whole month of November's created this fib channels we're in. So who knows? The shadow knows. So let's go into regular charts here, what we had mapped out before. So this is what we had from yesterday, just to reiterate properly. So we said people would be waking up in America and they would be coming to their charts and drawing these like bull flags or whatever, and they'd be getting trapped, and they'd see it break their trend line, and they'd be readjusting, and they'd be like, telling people that the sweet nothings that they wanted to hear, that would be going to the upside, 30K inbound. And then we just casually put out what they were going to say, and they said it, and we put out where it's going to go, and it went there. What more could you ask for? So let's see if we could do it again. What more could you ask for? So we're getting the 0.6566 rejection here, breaking through it with conviction. So not really with conviction, but breaking through it nonetheless, and haven't reached down to the 706. We wicked down to the 706 exactly and bounced off that region. We were saying we look for a bounce there, But now what's going to happen? Let's see. So you got the hourly reset nicely. We already went over kind of what the 12-hour and the 22-hour looked like. Let's look at the daily slightly. So the daily gave this kind of slow ease down, but it could just surprise you and go down violently here for the last leg down, like similar to here actually. You know, you had this kind of like slow ease, and then so you get the kind of, oh, we're done, we're gonna curve here. No, we're not. We're gonna curve here. No, we're not. You know, kind of idea. Just thinking out loud, you know, stepping into the charts, relaxing after work. Let's go to the 12-hour. We're putting on components at a time to just get like a different frame. Right now we're looking at the B and seeing what the B can tell us, the Momentum Master B. What is Momentum Master? Well, Momentum Master is an indicator suite which tells you deep insights into the markets or assets that you want to look in. And yeah, you got a bunch of things from money flow to momentum waves, and that's why it's the Momentum Master, is it can kind of tell you what you need to know. You can go to momentummaster.info, toggle all the components yourself. Very interactive, and you can see what they all mean. What is the trend cloud? Oh, okay. What are the baselines? So when you hear me talk about the baselines in the trend cloud, you can go there and read about it. You got the strength. What is the strength? The RSI and the Williams. What is the money flow? How are we getting the money flow derived? And you can see all these things. We have dynamic alerts. What are those about? And just go ahead and check it out if you got the chance. And yeah, so we're looking at Momentum Master B first. The Williams is getting low, but we're still in a position which can go a little bit lower. We like to see it turn green. Green is money for oversold. So when you get the green, then you start to see some upside with the rising sun. Then you can see some upside. We're not in that region just yet, and we're overbought here. So first of all, what you could do is, let's go to a regular chart with nothing on it. I think this has nothing on it. Yeah. Oh, this is 3L. Never mind. Yeah, so here we go. So you can look at, how did this stochastic express itself? How did the stochastic RSI express itself? So we go to here where it started, and we go up, and it went up 5%. But then what did it do to come back to? Like, yes, it went up 5%, but where is it at currently? So up 2%, and 2% in this entire expression to me is kind of like a struggle. So you had the same thing before. You had an expression here, and in the same, in not so much, you didn't give it back. You had a 14% move, obviously, and you know, how much does it give back in so little time? Have you seen any conviction enter the charts? Are there any vector candles? What are vector candles? Well, there are these green things that are on the volume here, which express 200% of the previous 10 candles combined. So are there any vector candles here? Not really. You're seeing volume kind of sparse, actually. So it shows to me that there's no real interest in buying. They're just trying to induce some more longs into this. So rather than me speculate, let's go look at high block and take a look at the liquidity as it stands currently on the 1 minute time frame. The 1 minute time frame is 1 minute candles that go back about 6 days, I believe. So the 6 day liquidity pools of basically liquidation points of open trades. So you have down here, it looks like you have an imbalance of longs of less than 1 billion right now. So there's more longs than shorts on this 6 day data, let's say. And previously we were looking at how they trapped these, they had these bubbles that they were coming back for. We were looking at this to come back to this, and they came back to it. And We watched it bounce off that, come off that too, and you're looking at different pools. And so currently there's a 217, let's zoom in. So currently you have a $217 million pool that opened up here at the tippy top. And yeah, they're trapped. They're underwater. And it's going for their liquidation point. It got this one, and now this is another one. Okay, so they stacked it up here. They went up and they came down, and they essentially went nowhere, but they created these longs here. And do you see so many shorts right here? So it would have to go all the way up to this region, up to 24K to just grab these stacked shorts right now. So logistically speaking, you know, this pool of 30 million, 25 million, 22 million, these little lines to the right over here, do they look juicy to you, or does this pool down here look juicy to you, where it's all stacked up and ready right for the taking with all these little longs stacked up here? I don't know, you tell me. Or how about down here? You got this 217 million thing. It's this huge amount of liquidity beyond anything up here in length. And you also have stacked down here as well a bunch of longs with some length and stacked many different trades in the 30, 40, 50, you know, million bubbles here that are all currently underwater. They're all currently underwater. These are their liquidation points. So that where they opened it up here, they're underwater right now. So if they're not getting paid, interesting. So far so good, I hope. So that's the 1 minute pool. And you got stuff all the way back here where they opened it here where they're slightly underwater. Some of them are break even or a little bit in profit. So you can see where they opened it, so you can also tell what sentiment they would be in, and whether they're trapped. Where's the trap been sprung, so to speak. So that's where we kind of look first, and then we go to these other time frames of the heat map for liquidity and liquidation points. So we're gonna take a look in a book, Reading Rainbow. Reading the charts. So it's thicker up here, obviously, but you got a low amount here. Of course, it could spike up and just grab that at any point in time, or it could spike down and grab this. So you're just looking at the imbalances on different time frames. So this is the 7-day, so it goes all the way back to February 23rd. Of liquidity pools that have been generated in this time frame. So it's solely based on this time frame. So that's why you have to juxtapose other time frames and see how it stacks up on top of those other time frames. So we're going to go to the monthly. On the lower time frame, obviously the upside was imbalanced, so that means they would go grab the shorts on just that time frame alone. However, if you look at this one, how is it going to be? You got 15, 14, that's 30 million, 45, 50, 60, 70, 80, 90, about 100 billion plus up here at 26, and that stacks on the yearly that we saw, which was a lot. And you got these 8 billion, 8 billion, 4 billion, you got a bunch of billions up here, single digits. And then you start getting double digits down here at 22.6. Double digits, but still nothing on the level of, well, they're pretty much the same as this up here at 25.5. But you got kind of double digits, at least double digits down to 22.2. And it would stop out a lot in this process as well. So you got a large caked out amount on the monthly. It looks ambiguous on that time frame. So let's look at the 3 month. We're not trying to get a bias. We're just trying to get objectively where an imbalance may lie. And that takes a lot of juxtaposing to do, because you don't want to get a bias. You want to get what's actually happening so you can actually see where it's going to go. So here we got 26 billion. That's a lot. Right there at 22.4, 26 billion. And then immediately 15, 10, 10, 10, 10, 10, 7, 11, 35. So you start getting a lot up here at 25.6, but you have 26 at 22.4, which is more nearby, and they're heading that direction, feasibly speaking. And yeah, you got 26 there, 19, 10, 14, 18, 33, 21, 2, 38, 48, 30. So clearly on the 3 month, you have an imbalance to all of this down here. And this is where I like to go to, I guess we should go to the 6 month just to see if there's anything we can glean from this. $68 billion, 60 billion, 43 billion, and 22, 8, 15, 8, 73. So it starts to get thick up here, but you still have 65, 56, 25, 40, 39, heavy double digits down here in the billions. I'm really surprised that they didn't come back and get it on when they were up in this region. Like, it doesn't make sense to me how they leave some stuff. So like what they did when they came up here before and they grabbed these 100 billion, they left this at, they left 155 billion there, 162 billion. Now it's up to 174 billion at 25.6. So that's a lot of liquidity just up here. Like if and when it comes back to 25k, that's a lot to release right there. That's a big spy balloon to pop. And 172, it starts to get sparser up here at 26.4. You get 100 billion at 26.8. But right there, that 174 billion is a really heavy magnet holding us up. So that is one thing that always I was looking at when we were back here. I was like, why did they get that exactly? It didn't make sense to me at all. But yeah, there must have been just more imbalance down here that they came back to get. It was too pressing of a matter to go grab. So eventually I believe they will come back to that. But how far down do they need to snatch an imbalance here is the question of the hour. So let's go ahead and take a look at back. Oh, whoops, let's double click to go back to this and make it bigger. So you got 81 billion, 45, 27. So for some reason, the thing I don't get is why does the 1 year not add up what you're seeing on the lower time frames? That doesn't make sense to me. It does not compute in how they formulate this. Like, where do they get the total from if not from looking at these pools below on lower time frames? So why does it, when I look at, like, say the 6 month, will it have more down here in a larger amount than the yearly? It doesn't make sense to me, really. It should be the same amount because it's the yearly is more time you're looking at than the lower time frame. But that's another question to ask Hyblock. See, like it says 47 billion, 30, 30, 30. So this here has a lot of the numbers are pretty high, but and then here naturally it's lower because you're only looking back to this point. And then when you go to the yearly, it's a large amount. So this should be contained within this time where it was building. So it should remain the same. That if I look at 20,800, it should say 48 billion on the yearly. So let's go to the yearly and make sure it says 48 billion at 20,800. So at 20,800, it says 81 billion. Okay, so it stacked it. It does stack it. So it just looks. So then you should just check the yearly for the total amount. So we'll start to do that and try to see if we can get the total comparative price to compare to. Because they're definitely stacking this up thick, thick, thick. Eventually they will come back to it. 174 billion, you wouldn't want to take that? I mean, I thought that at some point they're going to come back to it. You know, when is the question? That's the only thing we need to find out right now. So not getting lost in the minutia of going all the way down to a certain region, just when do they get enough to surge up to grab 25k again? That is the question. Now we can turn on the other stuff, all right? Let's turn on the other stuff. All right, so the one thing I was looking at and comparing to the immediate zone here was the 12-hour cloud being thick and then breaking down out of it, coming back and failing to grasp it and then falling down out of it. Like, how do you read the cloud that's still in your favor when you've broken through, right? So here we've broken through the cloud, we came back, tried to reclaim it, couldn't, and we broke down out of it. Okay, so what does that mean exactly? You know, we did the same thing here and then we broke well beyond down into here. Are we going to do the same? I keep asking myself. And it looks very similar to me, but not exactly the same, obviously. But we had tried to reclaim it, we broke down out of it. We tried to reclaim it, broke down out of it, and then it got thinner later. Now the thickness here is less thick than it was here. So what does that mean? You know, it's everything. It doesn't. What is the expression? It doesn't mirror. It's not the exact mirror of the past, but it rhymes with the past. So it's kind of rhyming here. I can't help but see that on the cloud, and I just can't unsee it for whatever reason. And now we have this here. We were just starting to express though, and then we broke down here. We're up higher and we're breaking down. And so I come back to that idea of, you know, we didn't really go anywhere. Price-wise, we didn't really go anywhere. Like, where did we go from here to here? 1%, and we've gotten overbought. Like, what is that about? If not a liquidity trap, a bull trap. You know, what is it? What's it about? And yeah, so it could be an inducement of shorts for a rejection, double bottom, bear trap as well. So it could be like this. Yeah. Could be getting complex like double bottom here on the ATR, which could also coincide with this. With the impulse here, there would be the 618 like this here. Realistically, you'd want to see it bounce in this region. It was the same thing we talked about yesterday. You see it break down. See, like, this is the higher time frame of what we did yesterday. Like, you would have seen this crossover event and you ride it down into this pocket and watch it bounce, and then the bounce is kind of lackluster, so is it going to go back down again? And the same thing happened on the lower time frame here. So we saw it go up, it kind of had the crossover, we talked about it getting rejected here, it went down into this pocket, bounced up, kind of lackluster, and now it's coming down. It's like a fractal of what's happening on the bigger time frame. So we're seeing this 706 region try to get reclaimed. Let's go to the dollar, because I think the dollar's correlating right now with what is happening, and relevant for that matter. So we're getting the dollar, a vector is entering on the dollar, I think. It doesn't calculate it as a vector, but basically we're getting that bullish, we're above the bullish trend-based fib extension tool 706 level, which puts us in range to go up to here. So these dotted lines are range high zones here and here, kind of fair value gaps, if you will, or just range high. Value area high, whatever the new lingo is these days. And yeah, so you can come up. And we were talking about a liquidity grab. They had an inducement, internal liquidity grab, and then the liquidity grab called for a bounce on these 6 time frames oversold, and then we saw it bounce up, and now we're getting this reclaiming of these, not rejection of. This is where you would look for rejection. 2 days ago we had rejection at the 706 of the scalp we were talking about, and that's where you would have locked in profit. So if you were in this as a long per se and it gets rejected here, you look to take profits or switch sides perhaps. But if you're getting above it, then you can easily come up to here and see this looks for a hard rejection. If it's fake, a fake out, or if it goes up to there, you could easily gap up to here. So this is kind of a bullish scenario for the opposite of Bitcoin. So that spells downside for Bitcoin. So if you look at these 4 time frames, we're getting overbought. So you have a 4 up here for the 4 hour, 1 hour, 15, and 5 getting overbought. And this is a combination of both. So you get the circle and the diamond to represent medium and lower time frames. When it's just the diamond, it's medium time frames. Okay. So this is just the kill zone event, I think. So where things are just starting to open. So you could chill out here, reset some of these time frames again, hold out. All right, so let's look at the S&P and how it's reacting to this. So you're getting a high amount of time frames oversold, and you're desperately looking for a balance of some nature. So the S&P is screaming upside at this point, with just the probabilities being upside. Asking for they're overstretched and oversold, and because of that probability. And this also happens to be the retest zone of that breakout trend line. So if we go to higher time frames, I'm talking about we've bounced around here, kind of broke out, and now we're kind of flirting with the idea of falling back down into it or not. So we're looking about possibly bouncing off this because of the oversold nature on these 7. So if you just look at that originally, if you take it from like retrace here, we already broke down that. Yeah, it's slightly different from Bitcoin. It's kind of reacting in a different manner. So are they going to gap up or gap down? What's the play here? Stochastically speaking, you should gap up. You should see a bounce. Stochastically speaking, on the dollar, back to that. Put that on hold. Whoops. So you're getting a swing failure pivot on that zone here. So the cloud has been acting quite interesting on how it's like thinning and thickening as it's going up, as like down with it. All right, so what we talked about was, just to reiterate from yesterday, we talked about when you break out, what do? You come back and you kiss the cloud. We kissed it, and this was one thing I was looking at work. As I was getting off of work, I posted this out. I was saying the cloud is thinning on the 4 hour, and you're seeing that kind of cupping of price action here. Okay, so this is where you start to get the mixture of the formulas, kind of like, okay, well, which time frame is the time frame that's going to play out? So this is what I was looking at earlier. I was like, okay, times where it curves like this, and in this case continues to go down before it goes up. Like, you try to see where, and it started to get, when it was meandering around, like they did these curves, but this had a straight up flip in the nature of the color. So it went from being purple to blue now. So you look for when it was purple and blue and then went back to purple. Did that occur before? And here's where you had from purple to blue in a short time. So it went to blue, but then went back down again. So it does happen where, but generally speaking, when you have a flip of the thinning and going to a different color, it expresses a shift in the narrative. So this is something you look at for a bounce. So they've been giving the expression of weakness. Are they actually going to surprise us and do something exciting here to the upside? That is the question. 4 hour. 4 hour came down to the 50. Is it going to curve on the 50 like it did here? It likes to do that sometimes. Williams coming back. Really coming in with that. And you're getting the 618 support. Out, got bought back in. Let's see who they liquidated first. They did tap into that liquidity slightly. That's where we're getting the kind of bounce right here. They tapped into what we talked about. They went into that region that was stacked, and they cleared it. And this is how divergence works, ladies and gentlemen. get that clearing of the liquidity, they repossess this money, and then they buy Bitcoin with that money. And that's what causes it to go up. And then if we check to see if that creates divergence, then that would have been your entry kind of point for a bounce. You should have been looking carefully at that time for that region. That was your liquidity grab. Let's see if there's a divergence that spawned off of that. Yeah, so you had the front run divergence, you had like divergence on the money flow, divergence on the RSI, and then that spawned the liquidity grab, and they went and grabbed it. And now you're getting overbought / rejection on the 618 here. Let's see if this thing's going to work with us today. Oh, there we go. Good. So you can see that they went and got the 100x people alongside those older orders that were back here. And did they spawn new entries on shorts? Does these 50x guys up here warrant all of these 50x down here? Or are they just trying to get more guys to come down into this region? And this is all of these time frames. You have these clouds, right? And if you can't get above the cloud and you get wicked off the cloud and it's not thinning, then it all starts here on these lower time frames. If you can't get above it, you can just keep following this down and don't get emotionally attached to it. And looking at this, just seeing how many 50x are down here that were induced here and that are underwater now still. They're underwater from their position being up here, went to their position and then keep going down. It shows who they're aiming at in doing so. But then you see that this person opened up a $13 million trade, which could possibly offset all the millions down here. And this is how you can gauge open interest versus price action. See which price is trapped. I was doing this before it became popular to look at CVD and open interest. I was doing this on my own, so I don't know anyone else that does this, to be honest with you. I just found it on my own. It was a free indicator and it was actual trades taken from the perp open interest data, so it was free, so I used it. And you can see the amounts here. And what do I set the amount to? 2.1 for every $100,000 trade, because I'm looking for big money to be trapped. And yeah, just see where they see it stacked, and you see there's more stacked shorts. Longs than shorts, so it still tells me that they want to come down to here, even though I'm seeing oversold, triggering people to enter, but not necessarily going. So, yeah, let's turn this back off again because we already got that idea. And midweek reversal. Back to the dollar real quick. Back. So the dollar is surging up, as I said, from getting the support here on the bullish projection. It goes up to the next point, which is the 786 in this projection, and possibly gets rejected there. I mean, I was honestly expecting it to chill out a bit. It's nice that it went up, in the sense that I would like Bitcoin to drop more. But it's holding. And this is a nice buyback wick. 4-hour kiss right here. The kiss and the thinning. The kiss and the thinning juxtaposition. The thinning kiss. Is it worth taking the 4-hour by face value off the thinning kiss here? Is this the zone? You're getting this 706 trapdoor open or permission granted to the upside here. So the 6-hour, when you have it this thick and it surges through, it does surge through it. The 6-hour is not one that you do get resistance off it, but resistance, kiss, we continue. You gotta jump off the weighted here. Interesting. It's a tough call. They're not making it easy today because they have this so much like sideways action. They're trying to make it ambiguously difficult. You know, this line could easily curve up as it changes, and it's not purple anymore. You know, it's only purple because it's purple right now, but that could change to this blue as it opens before it closes in 10 hours. You have 10 hours for this to be a massive candle to the upside or downside. So the fact that it's curving right now doesn't really mean anything until it closes. It could be anything. I mean, this is where you would look for a bounce. This is that region. If you're looking for upside, you know, on an hourly scalp, let's look at the hourly because the hourly is low. What is the hourly telling us? All right, so by the looks of it here, it looks like you're getting a support, at least on an hourly time frame. The hourly time frame looks like it's in a good position. So you could just take the hourly for what it's worth right here and just forget about everything that we just went over and just look at the hourly for what it is in this golden pocket retrace. So this is much better than yesterday's position here where everyone's drawing their bull flags and hoping for, like, you know, a short squeeze. You know, you're in a position where they got stopped out and they're underwater, and or they just cleared this pool. And do they have this pool that they're coming back for at the lows or not? Did they get enough? Did you have your fill? Did you? Well, did you? Are you thick up here now? It's very, very low. Less than a billion difference. They're inducing more up here now, 85 million. These bubbles are increasing. They went and grabbed that 85 million, and this guy's underwater now. So you see how they like grabbed that, and then somebody opened a short right there, and then now they came back and grabbed that short. So it's just a game of traps and knowing when the trap is sprung to jump on the other side of the trap. And these tell you when these traps will induce more in, and if it doesn't coincide with the confluent zone, then you don't take it, you wait for it to come back to that zone. So we're now in that zone, just as we were in that zone in the morning today, and we bounced off it. So reasonably speaking, based off this buy-up wick, it's not the best, it's not the 706 bounce down here, but it's still in the 0.65 region. So you could, if you maintain this zone, let's go to the lowest of the low time frames. Let's go find that crossover cascade event, if it's already occurred or not. The shark fin, as Smurf likes to call it, smart shark fin. So you had the divergence. And let's switch to, does it still work on Heikin Ashi with the... So you had the money flow divergence, and then you just take it as it crosses that line, crossover event, crossover event. And you could just enter in this region and wait for this to cross over and get the DNA helix beneath the price, and there you go. So you could enter right now in a entertainment sense, of course. Nothing I say or do should be taken as financial advice. Do your own diligence before entering any and every trade. And you gauge where that would be and your risk reward ratio. This is on a 1 minute time frame. And I mean, you could just, play it tight because you're playing the 1 minute scalp here, but seeing how it cascades, and you're going to do it into profit. So you put it here, and then you just target the top adaptive thing. And you could do it, and ride it as you go. And just have it real tight stop, and you follow the cascading event. It needs to close with, it needs to close with the cross in effect. It's not close. The cross did not happen just yet. You get that. This was where you would have wanted to get in though, right there. As it crossed up here and you got this candle, this would have been your perfect point. This is not really the top of the move, but you could still reasonably scalp. This is how you would scalp and find that entry on the 1 minute. You would find the divergence play, divergence, liquidations equal divergence. Here we go on the money flow, and then you have that divergence, and they repossessed the money and entered up, and then you're watching for it to cascade to a different direction where it's targeting something else. You put it just below that for now. You didn't technically get the crossover just yet on the 1 minute. There you go. Alright. And they were talking about you get this indecision thing first, and then you get the crossover after with no wick. I don't quite understand this Heikin Ashi strategy. Smurf can tell you more about it. it's him and Peyton that really saw it to fruition. I made these leading moving average ideas, and then they took it to another level with the Heikiashi entry strategy and scalping, and they're absolutely killing it with that. I'm still a noob in regards to how it works. Like, I understand it to a fair degree. We caught a 4-minute one early, but I think I'm late to the party on this one. This was a late discovery. This would have been where you get it. But you're getting a reclaiming attempt of the adaptive on the 1 minute. So if you're looking for that hourly scalp, like, you could be looking for that entry, you know, on the 1 minute resets of these to see if you're still good to enter after the fact, even though it's like a, you know, like a 0.1% difference. Like, if you're trying to up your leverage and try to take, like, you know, a 0.5% play on that hourly scalp, you could basically reclaim these things. Same concepts apply. You break through, you kiss the cloud, you continue. It's the same thing. It's all fractal. So the cloud concepts and these overbought and these baselines above the price, beneath the price, they all apply just the same in all the time frames. So you just take it to the lowest time frame for that entry, and then you move your stop loss up into the profit as you go. So we're just going to see this in a moment. It's flirting around with the crossover. It doesn't want to cross, and it's getting above the price. So this might be a better entry coming up down below here. Getting overbought on the 1 minute, so you could just, you know, get out and look for an entry, a re-entry, because it looks like it's going to cross over in this fashion and then go down and reset, so you don't want to get it along. So this is how scalpers do it. They just go in and out. You know, you got to be wary of your fees and what exchange you're on and all that stuff. Yeah, it's not the sauce just yet. And we'll stay till the end of this hourly candle close and then bid you adieu, but that would have been a nice little scalp entry thing, but that was the release of the liquidity that we were talking about at the beginning here. We kind of missed it. And then that freed up, you know, $300 million, and they repossessed and jumped up here. So that could have been the start of an hourly play. But you're still sparse up here. You have an 85 million. You still have an 85 million. You have kind of like a sparse liquidity to go for. So unless they're intending to just shoot up and grab all of this with essentially a short squeeze right now on the hourly play, this would be where you would try to find that move. I mean, you would have gotten a nice move here, so you could just try your luck on this region. So if you were just to go to the hourly time frame, so the stop loss calculator will calculate your stop loss on that time frame, and then you can adjust your stop loss accordingly to that region. So if you're trying to scalp it, you would obviously have it closer because you're doing either higher leverage or just a higher position size that you don't want to see in drawdown. So here you would do less and just let it ride because you're doing a longer position. So you would do something like this, and then you move it down to there, and then you gauge where that would be. Like, and you do the same trend-based fib extension that we did on the smaller scalp the other day. And you go like this, and you go back down to where it can go, and this coincides with the the range 706 here, this range. So it's a confluence region, and the 618 happens to be the same place we had before, 23,887. So the risk reward ratio is not so great. So you could move it to the ATR here. Say, wanting to up my stop loss to the ATR. This is a little bit conservative. You say I like that odds, and then you calculate that out, and you just say I'm going to take this to there, and then reassess and move the stop loss into profit, or take profit 1, and see if 3 hits to the high idea. See if it rides. See if it rides beyond that. You can reassess at that time. Does it go up to here? Does it go up higher? But the hourly time frame looks like it's possibly good for a kind of bounce of some nature. Whether that's to induce more shorts to the party so they can go lower, I have no clue. But this is how you would just get in and get out and get in and get out, and you could just play this chaotic range for what it's worth. And if it stops you out, if you would have been good on this one, and you would have been good all the ones this week. So it is what it is. You just take your region, but you were patient to wait to get to here. You didn't take it up here anyway, so you're not underwater. So you don't need to worry about that. And you can just test your luck, and you wait for the 5 and the 1 minute to come down again. So the 5 minute could be high right now. Yes, it is. And the 5 minute is high, so it could come down and give you a better entry. So we'll wait till the hourly close, and then you get the minute here. The minute is resetting. Minute is resetting. Cloud is kind of shifting. It's a 1 minute cloud, so it's a little bit more sporadic. Could be targeting back down. I mean, I'm still technically in the one from the top that's not closed completely, but this is what schlonging is about. So you're just like taking the top of the range and playing that, and the bottom of the range and playing that, one off of one another. Yeah, it looks like it's going to come down. The 5 minute, wait for the 5 minute to come down, and then you can see where that goes. Let's wait till the end of this expression and look at the liquidation levels one last time. We're here. 23 even. Is that big one, that big bubble that was trapped from way up here. So if you're patient and you wait to see if this occurs, you're just your biggest potential idea would be to wait till like 23k even to liquidate those longs, that 200k down there. 23k even is at the very bottom of the range. That would not be in this pocket at all. Let's turn on the liquidation levels one last time before the last 5 minutes here. So to reiterate where we were before, they had thickened up a lot of 50x down here. So if you got a liquidation event here and you happen to enter, like, you could close it out right now if you're in the long and just reassess where the hourly close begins. One of my criteria that was also something that I held on to is wait until candle close to confirm. So you could wait until the candle close. So we'll wait until the candle close and reassess where they go at the end of this candle on the hourly and how this hourly looks. So the thing about the liquidation levels indicator here that's free and has a limitation on is when you go to higher time frames, it doesn't really work so well. So beneath the like 15 and 5 minute region is where you'll get all these bubbles of where they opened stuff. So if you look here, .45 400k. So the hourly scalp, if you get the 3 time frames once again and they've knocked out a bunch of 100x multiple times here, 100x, 100x, 100x. So if they go down into this region, let's just be precise here, okay? So 20,090 around here. Okay, around here is that big bubble, and the stacked bubbles are around 20,000 even. So basically around here. And that coincides with all of these recently opened 50x. So the recent 50x, let's delete this. The recent 50x and so between this region here, you'd be looking for it to come back into before going up to this region here and knocking out these guys. And then that would be kind of like your nice entry of the bottom, double bottom here on this for a little mini scalp. Let's just turn off the ultimate really quick and turn this off. And so what Jason Casper does is he plays these other bigger ranges too. So he got the bounce off the 618 and rode that up to that 618. And you just like bounce 618 to 618 and you just be patient waiting for that idea. It's a pretty solid strat too. And we got the kind of failure on this local 618. So we're gonna reset right here and just reassess. We're cool, we're chilling. Waiting for the hourly candle close. Let's go. We got 1 minute, so we're not gonna go to the dollar just yet. So you had a cumulative amount of sell-off here, and you're starting to get some cumulative buyback here over the time frames, indicating that an interest is stepping in. So you have cumulative volume time frame delta with the open interest ideas of this. All right, so you got the hourly candle close. It kind of closed above the 706. And you wait for that 5 minute to come down ever so slightly to get into that region. And so this is where you wait for these alerts. So let's say you're working, or you're busy shopping, or you just have life to attend to. So you would go to the ultimate here and you just set one single alert. You just go to here. If it will let me, for some reason it's not going. But either way, there we go. Video lags for a couple of seconds. Getting worse on the lagging. Looking good, Diddy. We might need to I can't hear you over the music. I see. We'll have to work on that. Sorry about that. So if you hit the alert on Momentum Master, it's just one simple creation. You don't need to add anything to it, but it will give you all of these overbought and oversold things. So it will tell you which time frames and what their values were at. So if you don't have time to sit 24/7 in the charts, it can give you, you can mark regions like this, and then if you're getting those liquidity grabs with that in mind, it would basically let you know when that happens. All right, so you're getting a crossover in the hourly candle close, so you could just test it, you know, and just see what you get. The crossover event, you switch to the Heikin Ashi, and yeah, you're getting that crossover right now, and you got the candle with no wick, and it's an indecision kind of candle prior to the cross. So this is what they do, and they would just enter this scalp right here, and then you just kind of keep it real tight with the stop loss and then ride it up each candle as it cascades. And you would have had your higher time frame point of interest, which is the 706 here. It's also bouncing off the 786 bearish projection instead of falling through it, which is showing a negation of that. So you're going to here and just trying to ride it up. And you could, you know, if you want to look at the bigger play, the bigger picture, you know, oops, you know, you just try to see what you could do, like these massive risk reward ratios by cascading it and then trimming as you go, as you reach different milestones of fatigue or Fibonacci range areas here. So yeah, I'm just saying the hourly scalp could occur here to see something happen. So that is where we stand. Let's just say it's here. And then you just, if this was your stop loss, you would basically be moving it up to the base of each candle as you go, as it closes in that state. And you protect your entry at all times. Piat. Protect yourself at all times. Whoa, whoa, whoa. When you're alone. And you look at the 4 minute. Yeah, so this is what Peyton was, his sauce was the indecision here, and then you wait for it to cascade, and so you would get this crossover of the 4 minute, and then officially the 1 minute has transferred into the next time frame. So you're looking at the 2 minute, and it looks like it got the cross, not quite yet on the 2 minute, but we already got it on the 1 minute, so we're already hot. You would already be hot in it. And you're getting that rejection of the cloud, you know. And this is where you watch. All right, ladies and gentlemen, well, I'm not going to stay much longer. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable part. Which one shall I show today? Let's show that one. I like this one. Thank you very much, ladies and gentlemen, and I hope you have a nice evening. Please enjoy yourselves and each other. Peace.